Welcome to the deep dive. Today, we're going to really zero in on Starhub. It's their 2024 performance we're looking at.
Yeah, a big year for them, wasn't it? Their 25th anniversary.
Exactly. And they're making this interesting shift, moving from being just a telco to more of a digital ecosystem player.
That's the key transition. We've got their 2024 annual report right here.
Right. So our mission really is to pull out the key insights, business segments, financials, shareholder value, and where they might be going next.
Let's get into it. We want to give you that clear perspective straight from the report itself.
Okay, so big picture first. Starhub's very clear. They're focused on driving total shareholder returns, TSR.
That's the headline goal.
And they plan to do that through, well, disciplined capital allocation, sustainable returns, and really delivering on digital experiences, connectivity, security, cloud services.
And this all fits under their Dare Plus transformation plan, that 3-year thing.
Which has now moved apparently from build and invest into the harvest phase. That sounds significant.
It does. It suggests less heavy lifting on the build side, more focus on getting the value out of those investments, especially around their hybrid multi-cloud stuff.
Okay, so that harvest idea, to really see if it's working, we need to look at the specific business parts, right?
Definitely. Let's start with the enterprise business. Seems like a major growth area for them.
Yeah, the report says it pulled in close to $1 billion in FY 2024 revenue.
$1 billion. Wow. And the growth numbers.
Pretty strong. Cybersecurity services up 5.6% year on year, but the overall segment grew 26.2%. That's quite a leap.
Okay, 26.2% overall. That's substantial. What's behind that, do you think? Is it just general demand?
Well, the report points to their focus on modern digital infrastructure, cloud, connectivity, cybersecurity. It seems businesses are really leaning into digital transformation.
Right, and their own hybrid multi-cloud infrastructure is probably a key selling point there. Gives businesses flexibility.
And that cybersecurity piece, even at 5.6% growth, feels crucial given, well, everything happening with cyber threats.
Absolutely. It's a must-have, not a nice-to-have for businesses now. So are they just focusing on Singapore?
No, it seems like they're looking regionally too. They talk about aggressively scaling enterprise by fully integrating subsidiaries, JOS Singapore, JOS Malaysia, Strateq.
Yeah, okay. Bringing those acquisitions fully into the fold.
Yeah, and they're looking for more complementary acquisitions across Southeast Asia too.
Makes sense to leverage that scale.
And they're landing some big contracts, multi-million-dollar, multi-year deals, like a Polytechnic tender here in Singapore.
Oh, yeah. What's that involve?
Started with managed network infrastructure, but they see potential to add more managed systems, cloud, security, building deeper ties.
That's the classic land and expand strategy. Get in the door, then broaden the relationship. Smart.
And regionally, any examples there?
The report mentions JOS Malaysia securing a multi-million-dollar managed services deal. A financial institution, I believe.
Okay, so they're replicating success across markets.
Seems like it. And Strateq, which they mentioned is the sole MSP for major oil and gas players in Malaysia.
Right, managed services provider. Basically running the IT for other companies.
Exactly. Both Strateq and JOS Malaysia apparently have strong order books. Lots of government and enterprise demand for digital transformation. Think cloud, AI, cybersecurity again.
Okay, enterprise looks like a key pillar. What about the consumer side? How are they approaching that?
Their main strategy there is called Infinity Play. It's very customer-centric.
Infinity Play. What's the gist?
It's essentially about bundling. Mobile, broadband, TV, get customers onto multiple services.
And is it working?
The metrics they share suggest it is. They're reporting 3 times lower churn for these customers.
3 times lower. That's huge.
Yeah, and 33% longer tenure, plus over 3 times higher average revenue per user, or ARPU, for those on triple play bundles.
So bundle customers stick around longer and spend more? Makes sense.
Exactly. It creates that stickiness.
Are there any specific new services gaining traction within consumer?
They highlight a few growth verticals: Safe Hub plus Life, Life Hub plus, Game Hub plus Swing. Together, these are apparently making up over 5% of mobile service revenue now.
Okay, 5% isn't massive yet, but it's growing.
Right. And Safe Hub plus Wing, which focuses on safety and cybersecurity for consumers, seems to be the strongest performer there. Taps into that growing awareness,
Yeah, people are definitely more conscious of online security. What else on the consumer front? Improving the experience.
Yes, they mentioned AI chatbots, better portals, things like that. Also, interestingly, a sandbox environment for experimenting with new ideas.
A sandbox. like a testing ground.
Pretty much. Allows them to try things out quickly. And they're emphasizing proactive cyber defense for consumers too, ecosystem collaboration, user empowerment.
And they appointed a dedicated CISO, a Chief Information Security Officer.
They did, which really signals how seriously they're taking security across the board, not just for enterprise.
And this bundling, the infinity play, does it help them with pricing pressures in the market?
It seems to. By offering value through the bundle, they can perhaps maintain prices better, even when the market gets crowded or, diluted.
Makes sense. What about the actual network? Any big changes there?
Key things are retiring the old 3G network successfully. Frees up spectrum.
Ah, good move. More room for newer tech.
Exactly. And they're launching their 700 megahertz spectrum in 2025. That should help with coverage, especially indoors.
Okay. And generally improving mobile coverage and capacity, working with phone makers on 5G.
All standard, but crucial stuff. Network quality is table stakes these days. They need to keep investing there.
Right. And one more thing on consumer, their home of sports strategy.
Yes, the content play.
Their Football for All campaign, adding NBA, the Indian Premier League Australian Open, plus the Max streaming service on Starhub TV, plus Tefgrid.
It rounds out the offering, doesn't it? It gives people another reason to stick with their bundle, caters to different interests.
Okay, so that covers the main business segments. Now, let's pivot slightly to sustainability. They seem to be highlighting this quite a bit.
They are. It's becoming increasingly important for companies to demonstrate commitment here. Their board has approved specific KPIs linked to sustainability.
Like what?
Reducing emissions, using more renewable energy. It shows top-level buy-in.
And the CISO appointment we mentioned fits here too under that digital trust and security pillar they talk about.
Correct. It's integrated. They're reporting some tangible results too.
Yeah, 15% total shareholder return, 22,000 hours of employee training.
And environmentally, a 16.7% cut in Scope 1 and 2 emissions compared to 2021.
That's quite specific. And a very strong return on equity, 21.9%. Best in class, they call it.
That ROE number definitely stands out. Shows efficiency in using shareholder funds. They seem serious about embedding ESG, environmental, social governance across the business.
Pursuing near and long-term emission reduction targets, validated by the Science-Based Targets Initiative, SBTI.
That validation adds credibility. It's not just internal targets. Their four-pillar framework gives structure to it all.
And they're making progress on renewables too, right?
Yes, 17.2% renewable energy consumption reported. They're also looking at the circular economy.
How so?
Designing for longevity, repairability, device take-back programs, their smart support service, which helps with device issues and replacement, trying to reduce e-waste.
That's good to see. Any innovative examples?
Well, there's that partnership with the Hydroinformatics Institute, H2I, using cellular signals to map rainfall in real time.
Using mobile signals for weather mapping. That's clever.
It is. Shows how core tech can be used for, green revenue streams potentially and societal benefit.
And they also mentioned achieving over 99.95% mobile service availability.
Which is crucial for customer trust and reliability.
And a big jump in their Net Promoter Score, NPS. Up almost 17% to 38.3, suggests customers are happier.
That's a significant improvement in customer perception. Okay, so with all that context on the business and sustainability, let's look at the core financials. How does it all add up?
Let's start with dividends. What are they giving back to shareholders?
Okay, so for FY 2024, they recommended a final dividend of 3.2 cents per share.
Bringing the total for the year to
6.2 cents per share. That works out to an 80.6% payout ratio based on their adjusted net profit.
And what does that mean in terms of yield?
Based on their share price at year-end, it's over a 5% yield. Pretty attractive.
Definitely. How about the top and bottom lines, revenue and profit?
Revenue for FY 2024 was $2,367.7 million, just slightly down from $2,373.1 million in FY 2023.
So revenue basically flat, but profit.
Profit saw a healthy increase. Net profit came in at $168.2 million, up from $145.8 million the year before.
Interesting. Flat revenue, but higher profit suggests maybe better margins or cost control.
Could be. Let's look at cash flow. Cash flow from operating activities was $435.4 million in FY24.
How does that compare to FY23?
It was $451.5 million in FY23, so a slight decrease there.
Okay, and if we estimate free cash flow, taking that operating cash flow and subtracting depreciation and amortization, what do we get?
Right, so using D&A of $235.9 million for FY24, that gives roughly $199.5 million in free cash flow.
Compared to FY23?
FY23 operating cash was $451.5 million. D&A was $241.1 million, so free cash flow was around $210.4 million, a bit lower in FY24.
So cash flows down slightly, but still look pretty solid. What about the balance sheet? Debt levels?
Seems well managed. Net debt to EBITDA ratio is reported at 1.29 times.
Which is quite comfortable.
Yes, and their interest coverage ratio is strong at 10.7 times. No immediate concerns about servicing debt there.
And we mentioned that return on equity, again, 21.9%, really stands out.
It does, best in class, as they say.
So if you had to sum up the reasons for this overall performance, flat revenue, higher profits, solid cash flow, strong ROE.
The report really credits the DARE Plus initiatives hitting their stride. That enterprise business growth is clearly a big factor, too.
Right, the 26% growth there.
Prudent capital management, the infinity play working in consumer to maintain value, and likely disciplined cost control across the board. Plus those strategic investments paying off.
Okay, that makes sense. Now, specifically on creating shareholder value going forward, we know the FY24 dividend. Anything else?
Yes, they have an ongoing share buyback program, $50 million authorized.
And the goal of buybacks is usually?
To reduce the number of shares outstanding, which can boost earnings per share and return on equity. Another way to return value beyond dividends.
Got it. And their official dividend policy?
Stated as paying out at least 80% of net profit attributable to shareholders, adjusted for one-offs, paid semi-annually.
Pretty clear commitment.
Yeah.
Have they given any guidance for FY25 dividends?
They have. They've set a target for FY 2025. It's the higher of either 6.0 cents per share or the amount calculated by that 80% payout policy.
So a floor of 6.0 cents per share, essentially, provides some certainty for investors.
Exactly. It signals continued commitment to shareholder returns.
Okay, so pulling it all together now. Assessing the business moving forward, what's the main message?
The core message is that shift in DARE plus from build and invest to harvest. That's the big strategic theme.
Meaning focus on sustained growth, maximizing that TSR, reinforcing market leadership, but with disciplined execution.
Right. Less about massive new builds, more about optimizing what they have and extracting value. And enterprise is clearly tagged as the key growth driver.
Through that regional scaling, potential M&A, and the whole beyond telco strategy.
Precisely. They're looking beyond just connectivity pipes. Think integrated digital solutions for businesses across the region.
So expect continued investment in enterprise, but maybe more targeted.
That seems likely. While maintaining cost discipline overall, they also mention returning excess cash to shareholders, which reinforces that value focus.
And alongside that, continued focus on customer experience, innovation, and crucially, cybersecurity.
Those remain fundamental. Can't drop the ball there.
So the overall tone seems cautiously optimistic, ready to capitalize on the work done.
I'd say so. Confident in the strategy, focused on execution, and aiming to deliver for shareholders and stakeholders in the year ahead. Making the future count, as they put it.
Okay, so let's try to wrap up this deep dive. We've seen Starhub hitting 25 years, making that shift to a digital ecosystem player.
The enterprise business is definitely the one to watch for growth, driven by regional plans.
While consumer focuses on retention and value via infinity play, and clear commitments on sustainability and shareholder returns dividends and buybacks.
It paints a picture of a telco actively transforming itself, balancing growth ambitions with financial discipline and shareholder payouts.
Right. So here's a final thought for you, the listener, to ponder. With Starhub moving into this harvest phase and pushing regionally, what unexpected hurdles or perhaps new opportunities might pop up?
Yeah, and how will that beyond telco strategy really fare against potentially nimble, specialized competitors in cloud or cybersecurity across Southeast Asia?
It's that dynamic interplay, isn't it, between their strategy, their financials, and the fast-moving market. Something to keep an eye on. Thanks for diving deep with us today.